Hello and welcome to this podcast from Blytheway Business News. Today we're rejoined by a good friend, Steve Curtis, Chief Executive of Caledonia Mining Corporation. Caledonia, with a market capitalisation of around 129 million, is listed in London on the AIM market and on the New York Stock Exchange with the ticker of CMCL. Regular listeners may recall that Caledonia operates the Blanket Gold Mine in Zimbabwe. Steve, thanks for being here again. Since we last spoke, there's been even more positive news out of Caledonia. The brand new central shaft, which you've been working on for some time now, as we now know is the deepest shaft of any gold mine in Zimbabwe, is now operational. It's completed. It's been commissioned. What can you tell us about what that means now for operational capacity for the company?
Yeah, thank you. Morning, Tim. Yes, Tim, it's a very, very exciting period for us that after 6 years, we have reached completion. So what it now means is that Blanket Mine used to operate through a single shaft, the 4 shaft, and that was required to hoist ore and waste material. And it had a finite capacity, obviously. Now, to ramp up gold production, you obviously need 2 things. You need to be able to mine more material underground, and secondly, you need to bring it up to the surface. With 4 shaft as it was, we couldn't bring any more material up to the surface, so gold production was limited. Now that we've got central shaft, and central shaft will ultimately be the only shaft, but in the interim period, we'll be running both shafts as we transition from one to the other. But the immediate benefit is that we can move some of and it'll probably be waste production, which will move across to central shaft, and that will free up a couple of 100 tons a day of capacity on the 4 shaft, which will mean that we can mine at a higher rate and we can bring more material to the plant, which has spare capacity, and we can therefore ramp up gold production, which is our objective, to reach the 80,000 ounces by 2022. So it's transformational. You know, without infrastructure, you can't just wish additional gold production. You have to make it happen. The new shaft also gives us ability to go deeper into the mine. We can access new ore bodies deeper in the mine below the old 750 meter level, which was the bottom of the mine. This new shaft goes down to 1,200 meters. So just, Tim, everything is different. And over a period of time, this will just revolutionize how Blanket can operate. And, you know, we can just ramp up gold production, get to the 80,000 ounces. And that 80,000 ounces is going to be our anticipated run rate for what is currently life of mine up to 2034. So we're very excited.
So, Steve, amazing operational benefits in terms of increasing gold production efficiency at the mine. You funded this entirely from your own cash flow. So give us a quick overview of what this now does for the finances at Caledonia in terms of, is there much more capex to be spent on the site? What happens to costs? What happens to cash flow for the company?
Yeah, good question, Tim. We've been spending over $20 million a year for the last few years, over the last 5 years, really. And that is central shaft capex, development capex, sustaining capex. The major proportion of that amount of money was central shaft capex. So that was sinking the shaft and then equipping the shaft. Now, obviously, that is completed. We will still have capex to spend on development, and the overall capex number will decline. So 2021 will still be in the region of the 20 odd million. And then we will see a gradual reduction in overall capital expenditure. There will always be sustaining capex. You've got to spend money just to keep the mine operational and safe. But yes, what it means is lower capex, higher gold production, more cash generation coming out of Blanket, which will mean bigger dividends coming from Blanket up to its shareholders. And Caledonia is the major shareholder. And we will therefore get a higher proportion of cash available for us to either distribute to shareholders or to consider other opportunities, Zim included. It just changes everything. We're at a period when the gold price is still relatively strong. Our gold production is going to ramp up and our capex requirements are going to decline. So it's a great place to be, Tim.
Well, Steve, I was going to ask you, what are you going to do with the money? But you've kind of answered the question this morning already, because I see you've put even more good news out. You've announced another dividend increase, even after delivering a significant project with a central shaft. The dividend's now sitting at, I think, 12 cents per share. What's giving the company the confidence to increase the payment for what I think is now the fifth quarter in a row?
Yes, Tim, 12 cents a share per quarter. So that is fantastic. And you're quite right. This is the fifth quarter since October 2019 that we've been able to increase the dividend. We had one quarter right at the beginning of COVID where we held the dividend flat. But since then, we've been able to increase the dividend from its starting point of 6 and 7/8 cents. Now we're up to 12 cents. And that is, that cumulatively, that's a 75% increase in the dividend and the return to shareholders. Just quarter on quarter, it's a 9% increase. And, this demonstrates the board's confidence that having completed the Central Shaft project, having looked at the production ramp-up profile, we are confident that this dividend increasing picture that we're sending out is sustainable. We're going to have more gold production. We've got a good gold price. And we've always said our intention is to share some of those spoils with our shareholder base. So it's very nice every quarter to be able to come back to the market and say, confidence is still running high. There's no reason to change our strategy. So here we are, another dividend increase for our shareholders. We are very excited about that, and we hope the market appreciates that. We're still running now at a yield of about 3.2, 3.3%. It's a nice yield in dollar terms, but we're very, very happy to be able to increase the dividend.
So capex is coming down, costs are coming down, production's going up, dividends going up. It seems almost cruel to ask you this next question, Steve, but what more can investors expect from Caledonia in the coming months? I mean, you've got two other exploration projects, Glenhume and Connemara North. Is there even more to come from Caledonia beyond Blanket?
Yes, we indicated late last year that our intention is to increase our portfolio from a single asset base. The Connemara and Glenhume exploration properties, which are Zimbabwe-based, are now part of the portfolio. We've got options over those properties, so we're going to explore them for a period of time, up to sort of 18 months. And we'll then make a decision as to whether we believe it's correct to exercise those options and purchase the properties. Hopefully, we will find what we're looking for, because these are both prospective properties. They're brownfield projects. So we will be spending some money there. We will be continuing to focus on Blanket, because this year's target is we still need to ramp up production this year to somewhere between 61 and 67,000 ounces, which is above the 58,000 that we achieved last year, and then get to the 80,000 ounces. But yes, we want to fulfill our objective of making Caledonia a multi-asset gold producer, and deploying the cash that is going to be coming out of the larger Blanket mine to give more benefit and more return to shareholders. We've always said, if we can't find anything better to do with the money that'll give the shareholder a better return, then we'll give it back to shareholders. But so far, we're excited. We can see other opportunities, and we will continue to look inside Zim and outside Zim for where there are opportunities of the appropriate size for Caledonia to deploy its capital and its expertise. We're excited about the next couple of months. The Glenhume property is running. We've got drill rigs on site. The Connemara is still in final stages of planning. So obviously, at a point in time, we will be able to make some announcements of what the drill results are looking like. Obviously, we've got Q1 results coming out in about the next 6 weeks. And we will, again, in April, we'll have another dividend announcement. So as ever, it's busy. There's lots going on. And we really look forward to the future. We're especially interested to see that our projection of reducing all-in sustaining cost actually comes to fruition, because we know the cost structure makeup of Blanket. But as we ramp up production, the economies of scale start to trickle through, and you'll start to see a very, very cost competitive operation at Blanket, which will again just be delivering more and more cash for shareholders and for Caledonia to consider new opportunities.
Steve, thanks for joining us. That was Steve Curtis on this morning's podcast from Blytheway Business News. Steve is chief executive of one of those rare beasts, a mining company in Africa giving money back to shareholders with plans to continue to do so. As I said at the start of the podcast, Caledonia listed in London and in New York. That's it from Blytheway Business News. Thanks for listening.